All right, today we're doing something a little different. We're going to crack open a professional trader's playbook for what is honestly one of the trickiest days on the calendar. A day where the main goal isn't to win big, it's just not to lose. See, on any normal day, the game is all about offense, right? Traders are out there like hunters. They're looking for any edge, any opportunity they can find to make a profit. It's all about pushing forward. But this question just flips that whole idea on its head. We're about to look at a day where the pros, they're not hunting for those big wins. Nope, they are focused on one thing and one thing only, not losing. It's a total defensive shift in mindset. So, what is it about this particular Friday that makes it so different? Well, it's the Friday right before a 3-day weekend for Martin Luther King Jr. Day. And in the world of big money, institutional trading, a long weekend changes absolutely everything. I mean, think about it. If you're managing billions of dollars, the last thing you want is to hold some huge, risky position for 72 hours while the market's closed and, anything could happen in the world. So the smart money, the big institutions, they start closing up shop and heading home early. And when they leave, they take all that volume and power with them, basically draining the market. So with all the heavy hitters heading for the exits, a pro's game plan is pretty much set before the market even opens. The goal isn't to try and hit a home run in an empty stadium. It's to protect the capital you've already worked hard to build. This source material is really blunt about it. The verdict is, we are in capital preservation mode. That is the mission for the day. Every single decision flows from that one defensive idea. The goal isn't to make money, it's to keep the money you have. Okay, so if the big players are leaving, what stops the market from just completely falling apart or, shooting to the moon? Well, it turns out there are these powerful, unseen forces that create what are basically invisible walls trapping the price. Let's break down what they are. These walls are built from 3 main things. First, you've got a ceiling that's being created by government bond yields. Then, you have the fading footprints of the institutions as they pack it in for the weekend. And finally, and this is the most powerful force today, you have the very structure of the options market itself. Okay, let's start with yields. Think of the 10-year Treasury yield like a governor on an engine. If it revs too high, let's say above 4.25%, it slams the brakes on the stock market. If it drops too low, below 4.10%, it's like hitting the gas pedal. But right now, at 4.18%, the engine is just idling. It's a neutral. It's not helping, but it's not hurting either. Now for the really interesting part, the options market. Up at the 7,010 price level, we hit our first invisible wall. Market dealers, the people on the other side of your trades, have sold a mountain of bets that the price will not go above 7,010. If it does, they start losing a ton of money. So they have a massive financial incentive to keep selling, to push the price back down and create this powerful ceiling. So you've got this massive ceiling hanging just above the market's head. And right now, the price is stuck just below it, pinned in what the source calls the kill zone. It's just this area of choppy, directionless noise where it's incredibly easy to get chewed up. But it's not just pinned from above. It's also being supported from below. Down around 6,950, we have what's called the put wall, and it's the exact opposite of the ceiling. Dealers have sold a ton of bets that the price will not fall below this level. So to protect their profits, they are basically forced to step in and buy if the market dips this low. And that creates a really powerful floor of support. Okay, so we're pinned. We've got a ceiling at 7,010, a floor at 6,950, and we're in full-on capital preservation mode. So how does professional actually trade a day like this? The playbook really gives us 2 main options. The first is the holiday fade. This is a bet on simple human behavior. Any little pop in the morning is likely to get sold off as the last few traders close out their books and leave for the weekend. The other strategy, the gamma pin, which the source really favors, is more mechanical. It's a direct bet that those invisible walls are going to hold. You basically act like the dealers. You sell near the ceiling and you buy near the floor. And this is what it all boils down to. It is a game of probabilities. There's a huge 60% chance the market just gets pinned between those walls and drifts sideways. Then there's a much smaller 25% chance of a Friday flush down to that floor, and only a tiny 15% chance of a squeeze that actually breaks through the ceiling. So what does a professional do? They play the highest probability scenario. So here's what that 60% scenario looks like step by step. The price is expected to just chop around in a really tight range. Sometime after lunch, the volume is just going to completely dry up. And then the market will just kind of drift sideways into the close. And notice that last point. It's the most important one. The professional action is do not start new swing trades. The risk just is not worth the potential reward today. And that brings us to the real takeaway from this entire analysis. It's not some clever entry or a secret indicator. It's about having professional discipline. And here it is. This is the entire philosophy for a day like today, all summed up in just 4 words. Choosing to stay in cash, to be on the sidelines, that's not a failure to act. It is a position. It's a strategic, defensive choice designed to protect your capital for another day, for a day when the odds are actually in your favor. It's really something to think about, right? In any game of probabilities, whether it's trading or something else, maybe the greatest skill isn't knowing when to push all your chips in. Maybe it's having the discipline to know when the best move you can possibly make is to just fold your hand and wait for a better one.